Welcome to The Explainer. Today, we're unpacking Prologis' massive Q2 2026 earnings report. And hey, if you think this is just another run-of-the-mill real estate update, you might want to think again. We're going to look at how a traditional logistics giant is quietly, yet aggressively, expanding into digital infrastructure and energy. We have a ton of fascinating data to cover from this quarter, so let's get into it.
We've got a packed roadmap for you today. A record-breaking quarter, the global logistics giant, driving financial growth, and finally, the next phase of growth.
Starting right off with Section 1, a record-breaking quarter.
Because if you want to understand the true health of global supply chains, you look at Prologis. And this quote from CEO Daniel S. Letter perfectly sets the tone for what we're about to see. He notes that the business is entering its next phase of growth. Customer demand is broadening, and their opportunity set is expanding. They recognize that their customers' needs are shifting, and they are moving fast to meet those new demands.
And wow, this number right here perfectly illustrates that momentum. 67 million. That's the staggering amount of square feet of leases signed just in this quarter alone. I mean, that hits an absolute record level for the entire company. To put that into perspective for a second, that is like leasing out over 1,000 American football fields of warehouse and logistics space in just 3 months. That kind of velocity tells us that businesses are heavily investing in their physical footprints right now.
Moving along to Section 2, the global logistics giant.
To understand how they even manage those astronomical leasing numbers, we've got to zoom out to the foundation of their business. Prologis is the undisputed global leader in logistics real estate with a footprint spanning 20 countries. They laser focus on high-barrier, high-growth markets. You know, those locations where it is incredibly difficult to build new supply, but demand from consumers and businesses is absolutely red-hot. From the Americas to Europe and Asia, their geographic reach is pretty much unmatched.
Let's make that scale a bit more tangible. They own or have investments in 5,929 buildings. That physical footprint totals a mind-bending 1.3 billion square feet globally. This isn't just real estate, guys. This is literally the physical operating system for global commerce. When you control 1.3 billion square feet, you have an unbelievable vantage point into the global economy.
So where is all the revenue coming from? Breaking down their net operating income, or NOI, you can clearly see where their financial engine hums the loudest. The US is the heavy hitter here, driving a massive 84% of the pie. But they're strategically supported by these really valuable footholds globally. Europe's generating 9%, other Americas at 5%, and Asia at 2%. This huge U.S. concentration gives them rock-solid stability, while the global assets offer that sweet exposure to international growth and diversified revenue.
And who exactly is renting all this space? Well, they lease these modern logistics facilities to roughly 6,500 diverse customers. They're primarily focused on two major categories, B2B and retail, specifically online fulfillment. Since e-commerce requires significantly more logistics space than traditional retail, Prologis is perfectly positioned to capitalize on that trend. All of this translates to a whopping $240 billion in gross assets under management. Crazy, right? Okay, let's pivot to Section 3, driving financial growth. Let's see how this unprecedented physical footprint actually translated into cold, hard numbers for Q2 2026. The crucial takeaway here is this massive year-over-year jump. Net earnings per diluted share nearly doubled. We're talking a jump from 61 cents in Q2 of 2025 to $1.13 in Q2 of 2026. This just proves that their massive scale directly drives serious bottom-line value.
Now, looking at their core funds from operations, which as we know in the REIT world is the key metric showing cash generated by the business, you can see a really steady upward climb. It went from just under $1.4 billion a year ago, straight up to over $1.55 billion this quarter. That is what you call a highly durable earnings growth trajectory.
Drilling down a bit deeper into the operational metrics, period-end occupancy is incredibly tight at 95.5%. But even more notably, net effective rent change surged by nearly 37%. So when leases are turning over, they are capturing massive mark-to-market rent increases. That incredible pricing power drove cash same-store NOI up 8.5%. I mean, this is the textbook definition of embedded rent growth. They also really flexed their capital deployment muscle this quarter, completing $1.8 billion in third-party acquisitions. And get this, making these acquisitions at a discount to replacement cost shows a highly calculated, super smart approach to capital allocation, especially in our current high construction cost environment.
Which brings us to Section 4, the next phase of growth.
Because Prologis isn't just a passive landlord collecting warehouse rent.
Let's look at the strategic pivot that's redefining their whole business model. Check this out. 5.8 gigawatts. This metric completely stands out in the report. Prologis has secured or advanced a massive 5.8 gigawatt data center power pipeline. They're taking their vast land bank and their power access and heavily leveraging it for digital infrastructure. In fact, they started $1.6 billion of development this quarter across both logistics and data centers. They are rapidly expanding way beyond just traditional warehousing.
And this strategic pivot, combined with their rock-solid core leasing strength, is exactly why they've confidently raised their 2026 guidance, for the second time this year, by the way. They're forecasting higher net earnings, up to $4.55 per share, and boosting development starts to a massive range of $4.5 to $5.5 billion. They've got deep customer relationships, a bulletproof balance sheet with high liquidity, and crystal-clear visibility into future earnings.
So, what's the big takeaway from our explainer today? It's this. Prologis is uniquely positioning itself right at the intersection of where agile supply chains meet clean energy and digital infrastructure. They aren't just giving a company a concrete box to put products in anymore. They are building the intelligent physical framework that literally powers global commerce, perfectly bridging the physical and digital worlds.
As they continue to build out this staggering ecosystem at such an unmatched scale, it leaves us with a pretty fascinating question. How will this accelerating blend of traditional warehousing, next-generation power pipelines, and data centers permanently reshape global commerce? It's a space we all need to be watching very, very closely. Thanks so much for joining me for this explainer, and I'll catch you on the next one.